Ladies and gentlemen, good day, and welcome to the Q3 FY23 earnings conference call of Indian Metals and FERRO Alloys Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Mamta Samat from Perfect Relation Private Limited. Thank you, and over to you, Ms. Samat.
Thank you, Michelle. Good afternoon, everyone, and thank you for joining us on Infa's Q3 FY23 earnings conference call. Today we have with us the senior management represented by Mr. Prem Khandelwal, CFO and Company Secretary, Mr. Vijay Anand Mohapatra, COO, Mr. Deepak Mohanty, Head of FERRO Alloys Business Unit, Mr. Binay Agarwal, Head of Power Business Unit, and Mr. Sandeep Narade, Head Mines Business Unit. Before we begin, I would like to say that some of the statements that will be made in today's discussion may be forward-looking in nature. We will begin the call with opening remarks from the management, after which we will have the forum open for the interactive Q&A session. I would now request Mr. Prem Khandelwal for the opening remarks. Over to you, sir.
Thank you, Mamta. Good afternoon, ladies and gentlemen. Welcome to the third quarter earnings call of the company. The results are already in the public domain. You might have seen that. This quarter results got impacted because of sharp fall in the ferrochrome realization price, which has come down from 1,16,000 to 93,000. And sharp increase in the cost also. Cost of production has gone up from 65,700 to 79,900 in the third quarter compared to corresponding quarter in the previous year. As far as statistics is concerned, production figure for the third quarter production was 58,000 compared to 61,000 in the corresponding quarter of previous year. Power output was almost same at 272 million units compared to 275 million units. However, chrome ore raising was more in the current quarter at 1,34,600 compared to 1,07,900 in the previous quarter. Ferrochrome sales quantity was 65,773 tons in the current quarter compared to 55,400 tons in the previous quarter. And average realization, I have already told you, it has come down to 93,000 compared to 1,16,000 in the previous quarter. Cost of production has gone up very high to 79,902 compared to 65,713. With this, we can now start the Q&A session. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bhavesh Chauhan from IDBI Capital. Please go ahead.
Hi, sir. Sir, I would like to know about your expansion plans. I think are we raising our capacity by 1 lakh metric tons?
Yes.
So, sir,
yes, will that we are going ahead with the Kalinganagar project, wherein we are putting up 2 furnaces, which can produce up to 1 lakh tons of ferrochrome annually.
So, will this be backed by chrome ore in the near term, or it will take time?
No, it is backed by, obviously, it is backed by chrome ore. We are planning all our furnace expansion based on the further ore available. So, by the time the furnace is operational, we will have further ore available to meet the requirement of this furnace.
Okay. And sir, secondly, on your EBITDA per ton spreads, I mean, what do you think should be the normalized spreads, once things normalize? Because today you are facing lower prices and higher raw material prices. So, what should be normal EBITDA per ton? Maybe 15,000, 20,000, something like that.
Normal EBITDA should be 15 to 20,000 per ton. But as you know, we are into cyclical industry, so it keeps on fluctuating every quarter. Third quarter was badly impacted because of sharp fall in the prices, but now in the fourth quarter again, The prices have shot up after China reopening, and right now it is around 1,10,000. So fourth quarter again should be much better than compared to third quarter. So that is the characteristic of our industry. It keeps on fluctuating every quarter. But on average, if you take long-term projection, it is maybe around 15 to 20,000 per ton we can take.
Yeah, got it. Sir, and lastly, what is our chrome ore mining cost per ton, and what is the market price of it?
Normal, our all blended together and landed at the Chodwa, it is around 8,500 rupees, as compared to market price of around 16,000.
Yeah, got it, sir. Thanks a lot, sir.
Right, thank you.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Arshav Patel from Molecule Ventures. Please go ahead.
Sir, my question is regarding average coking coal cost. So I wanted to know what was the average coking coal cost or coke cost consumed for Q1 and Q2.
Deepak, would you answer that?
No, you see, okay, let me answer. So exactly it is not, but the coking coal, as you know, the prices have gone up drastically, over $500 and all, but have started coming down, and overall average maybe it will be because
no, he's asking about Deepak is asking about Q1 and Q2, I think.
Yes, Q1 is current quarter, which is Q3.
Q3 versus Q2.
Actually, it has gone up based on the average price. The average price, consumption price was around 22,000 in Q2, and its cost total, the consumed quantity cost was 22,000 around, which has gone up to 23. Marginally, it has increased because the low cost inventory is over and higher cost inventory has gone up. So marginally, it has gone up in this quarter, but it is going to come down also in the coming quarter.
So, sir, is it fair to assume that by Q3 we have exhausted all the high cost inventory on our books for coke?
Still something will remain because normally we keep material for 2-3 months because we import coke from Colombia and China and other places. So we don't work on month-to-month basis, and it's always over a quarter, more than a quarter, because considering the lead time from Colombia.
Sure. So, sir, what would be our average rate of coke on books currently? Even a ballpark figure works.
The coke must be in the range of 45 to 47,000, I think. Coke price, met coke price.
Sure.
7,000 around at the moment.
Okay, got it. And sir, coming to coal equation, so roughly our annual requirement, I was going through the past phone calls, and roughly our annual coal requirement is around 1 million ton. And broadly speaking, 70% of it is coming from Washby reject, and 30% of it is G12 coal. So I just wanted to understand over last couple of quarters, how have the coal prices increased?
Binay?
Over last 3 quarters.
Sir, I just wanted to clarify this one. In Q2 FY23, the average coal cost was 3,500. In Q3 FY23, the average coal cost is 2,850. It is slightly dropping. And we are expecting in the Q4, that will be around, average coal cost will be around 2,700. In this way, we are just anticipating.
Sure, got it. Mm-hmm. And in terms of how does it translate to the power cost? Because as per the previous phone call, Q1 power cost was said to be around 3.6 rupees per unit. Q2 was 4.11. And for Q3, how much would that convert into?
Mana, you are asking for Q4 projection?
No, sorry. Q3. I am asking for the
Q3,
quarter.
But quarter Q3, the coal cost was 3.44.
Okay. Got it, sir.
Yeah.
Mm-hmm. And sir, we understand that last 2 quarters were very bad because of falling realization and higher input cost prices. But given the current spreads on current prices across realization, coking coal, and our cost structure, how do we stand right now? So, given the current realizations, can we assume we are already at the average long-term margin rate of around 20%, 15 to 20,000 EBITDA per ton?
Harsha, as far as cost is concerned, I think we have seen the peak of the cost, and cost is now coming down, whereas the realization has gone up in this quarter. So this quarter we are expecting margin again back to 20% level, and going forward it should improve further.
Sure. Okay. Sir, I'll come back in. Thank you. All the best.
Right. Thank you.
Thank you. Participants, you may press star and 1 to ask a question at this time. We have the next question from the line of Dharma Venkatesan, an individual investor. Please go ahead.
Good evening, sir. So my question is regarding the one-time settlement we have applied for the electricity dispute that you have mentioned in the presentation. So how much cash outflow that we might be looking at? Like, I just want a ballpark figure. I know it's exact figure is tough because it's a negotiation. So.
Bijan, would you answer that?
Regarding this one-time settlement of ED, we have got this one deposit in lien and escrow account around 100 crores, and interest on that is 91 crores, and we have a principal of around 26 crores, and interest on this settlement will be around 44 crores. So total will be around 270 crores, out of which around 200 crores is already booked under lien and escrow account.
Okay, sir.
So actual outflow, further outflow from the company would be around 71 crore.
Oh, okay, sir. And sir, for the expansion plans, like I was listening to your CNBC interview, so you had mentioned that if the current price levels improve or maintain at these levels, that we will not be needing any long-term debt. So in case if it's not being able to maintain that level, how much amount of the debt the company is happy to take, or whether we will delay our expansions plans a bit? So I wanted more bit color on.
No. We cannot delay the expansion plan. Expansion will go on as scheduled, and we are not foreseeing any such danger in the near term. So we are quite hopeful that whatever cash is going to be generated can be used for the expansion project. As of now, we have not planned any debt raising for the expansion project.
Okay, sir. Sorry to dwell upon it again. Like, in case we need to raise debt, what is the debt to equity level, or what kind of debt level that we might be comfortable with, given the cyclical nature of the industry?
In case we have to raise, we will not go beyond 0.5:1.
Debt to equity ratio, correct, sir?
Yes.
Okay, sir. Okay, fine, sir. Thank you, sir. If anything, I'll come back again in the case.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants. Anyone who wishes to ask a question may please press star and 1 on their touchtone phone. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Namaskar, Prem Saab, and धन्यवाद sir opportunity के लिए. Sir, थोड़ा late. I have joined a bit late, sir. If you to summarize the quarter, sir, this was a quarter wherein we had the double whammy of lower realization and higher inventory of raw materials. This is how it should be summarized. And going ahead, as for the next quarter, we are seeing the reversal of the same. That means higher realization and lower raw material, and hence the spread improving.
Yes.
So
you have quite aptly summarized the cyclical industry of nature of our industry. So you are spot on.
Okay, sir. So, sir, taking this into account, sir, I think so earlier last quarter में आपने POSCO का भी issue बताया था कि there was some delivery issue and some force measure. Where are we, sir, in terms of POSCO part, and what were the deliverable numbers, sir? Q3 के लिए क्या थे और अभी को क्या हम लोग एक्ट कर रहे हैं?
Deepak?
Yeah. Actually, Q3, they were under force majeure. So, in fact, their production only started towards end of November and to a very little extent. So, we had only 1,600 tons available there. So, which they took, of course, whether not to utilize or not, they have taken in that quarter. And in fact, their production has started. The major problem with them was mainly the rolling. So which has also slowly started. So in this quarter, they will be taking something like 16,000 maximum in this quarter, that too in month of February, in this February and March. So we have started supply for that. So it will come back to normalcy from the first quarter of next FY.
And sir, in normal conditions, what is their offtake on a quarterly basis?
We roughly supply them 7,000 per month, 21,000 per quarter.
Okay. And this quarter, we are expecting it to reach to 15,000 to 16,000?
This quarter.
This quarter. January to March, it will be 15 to 16?
Yeah.
Last quarter for...
March only they will take. Yeah.
Correct, sir. Ji, sir. February and March. January, there has been no shipment to them.
No, we have made shipment just now for supply in the month of February.
Okay, and this number was 1,600 for the December quarter. 1,600 tons.
Because we had that much inventory there, which they are obliged to take, and they have kept their obligation and taken the material, paid us whether they consumed or not. Okay.
Correct. And sir, and where did we sold the?
I'm sorry to interrupt, sir. Sir, I would request you to rejoin the queue, please.
Jarur, ma'am. Thank you.
Thank you. A reminder to all the participants, you may press star 1 to ask a question. We have the next question from the line of Joe Shah from 7 Seas. Please go ahead.
Good afternoon, everyone. Vijayanand, this OTS matter is not very clear to me. Sure. As per the information given, we'll be paying 45 crore rupees as a one-time settlement. And I understand that there is an interest liability of some 91 crore rupees. An interest amount of about 200 crore rupees we have parked in escrow account. So overall, how much will be our saving of contingent liability in terms of a rate amount as well as interest amount?
This one is already deposited inside the escrow and linoleum account.
Yes.
And interest on that we have incurred around, that is coming around 200 crores. Okay. Actual this ED is a principal amount is 26 crores, and interest from this period, November 19 to March 22, that is coming around 44 crores.
No, so our liability is 200 crore rupees, interest liability.
No.
No. Interest liability is not 200 crores, Joe. Why?
Yes.
See, whatever in no lien account, we have deposited 14 paisa, so that is around 100 crore.
Right.
So that amount will go to them, and on that 100 crore, we have earned interest of around 91 crore. That amount will also go to them.
Right.
So settlement, as per the terms of settlement, we have to pay whatever is lying in the no lien account along with the interest.
Sure.
And 26 crore what we have not paid to them earlier, prior to this period. Over that, there is an interest liability of 45 crore.
Right.
So that 45 plus 26, 71 crore we have to pay further on top of whatever amount is lying in no lien account. That is the settlement.
So without settlement, what was our liability?
Without settlement?
What was our liability, contingent liability on this issue?
Yes.
So what was the total liability? Now 100 crore plus 91 crore rupees interest earned on 100 crores. And plus we are saying for 45 plus 26 crore towards the interest amount. So this is settlement. So how much we are going to save on this settlement?
No, where is the question of saving here?
Because when the settlement means, we are, 50%, we are doing 50% settlement of liability, something like that.
No, it is not like that. We have not acknowledged any liability from them. As per us, we were liable for 6 paisa only, which we were paying to them.
Right.
But they were claiming 20 paisa.
Right.
Which we have not acknowledged.
Right.
So that 14 paisa differential we were depositing into no lien account, which was earning interest also.
Right.
As a part of settlement, that entire amount goes to them.
Right.
And the 26 crore, whatever we have not paid to them earlier,
right.
over that interest is coming 45 crore.
Right.
So that amount we are paying on top of no lien account. So there is no saving as such in this. I mean, we have not acknowledged anything on the books.
So what will be the total outgo on this OTA? How much infra would be paying from escrow account as well as the cash account?
271 crore.
Total will be paying 271 crores.
Yes.
And after there will be no liability. It will be zero, right?
No, there will not be any liability. This is a part of settlement.
Right.
So as per the settlement, once we pay this money, everything will be closed.
Okay, very good. Okay, congratulations. Yeah. Good.
Right. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to answer questions from all participants, please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. We have the next follow-up question from the line of Ashaf Patel from Molecule Ventures. Please go ahead.
Thank you for the opportunity, sir. I just wanted to confirm that given that we are backward integrated for our chrome ore requirement, any rise in chrome ores would not affect
I'm
our
sorry
cost
to interrupt, Mr. Patel. I would request you to please use your handset to ask a question. We are not able to hear you clearly, sir.
Am I audible now?
Yes, sir. Please proceed.
Sure. So I wanted to know, clarify, given our backward integration into chrome ore, any rise in chrome ore will not affect our cost structure. Is that correct understanding?
Yes. You mean any rise in the market price of chrome ore?
Yes.
Yeah. That is not going to impact us.
Sure, got it. So only impact to us in terms of variable cost would be largely coke and coal through power cost.
Yes, besides the inflation cost in chrome ore raising.
Sorry, in chrome ore?
Inflation cost.
Okay, got it. And sir, I understand that regarding Utkal settlement, the timeline is not clear. It might take 1 or 2 or couple of quarters. But just wanted to understand how much are we expecting from them?
No, the valuation process is going on, Mr. Patel. So the quantifying amount quantification is not still not happened. So, but we are quite hopeful of getting back around 350 crore.
Sure. That's all from my side. Thank you.
Yeah. Okay. Thank you.
Thank you. We have the next question from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yes, sir. In continuation, sir. So where was the tonnage which was dedicated to, for POSCO was sold, and how have the realizations were affected, sir?
Deepak, would you answer that?
Yeah. So in fact, we had to go for the spot tonnage, and when you talk about spot tonnage, it is always China. And obviously, the time when the POSCO was not there, the prices were at the bottom, at the worst scenario, because prices even in China started moving up in the middle of December. After the announcement of the government to taking out the COVID and other things, basically lockdowns and other things lifted. So after and certain boost measures also taken by the government for the real estate stimulus measures. So with that, it started moving in the second half in view of also Chinese holidays. So the thing what were sold, that was at the lowest spot rate. So accordingly, the prices were also low compared to normal scenario.
Okay, sir. Sir, and
almost 25,000 we sold during on spot basis during that quarter, the last quarter.
Although marked for export, but they were sold for export price.
No, if you are telling for POSCO 21,000, naturally around that 20,000 tons we have sold in the spot. We have not reduced any sales because of that. thing, but had to be sold in the spot market, which was at the lower level at that point in time.
Yes, sir. My point was that
October.
Yes, the realizations were lower since the contract for POSCO did not happen. Had POSCO honored, the realizations would have been different because of the contracted, the price for the quarter was higher than what the spot prices were.
We cannot say that because normally we decide quarterly pricing just before the quarter after the benchmark is declared. So during the prevailing situation normally takes care, and of course on the overall YTD basis or quarter, the overall in 2, 3, 4 quarters it averages out. So we cannot say whether at this point time in the point of time when we are supposed to finalize the price, that point in time would have got a higher price than the spot or lower. It's not really fair to discuss that at this juncture.
Correct. And sir, what are the benchmarks currently for the Jan to March quarter and the difference between the December and the March?
In fact, the benchmark for Q3, our Q3, which is Q4 of calendar year, it was 149, which has come down by 31 cents from the previous quarter in the third quarter, which is October to December, and same has been rolled over for the January to March quarter. So if you say at that point in, it would have come down by 31 cents. So that's why I was telling we should not discuss, because spot price is based on the spot in China. But while the long term is always discussed based on the benchmark price as well as the prevailing situation, even considering the China because they are the biggest player.
And so what are the current spot prices?
It is already 105, 106 cents at the moment.
Okay, so whatever the gain we will have will only be on account of lower raw material prices, because other than that, the pricing has remained the same for even to Jan to March quarter.
No. Now the prices are around 1,10,000 compared to 93,000 average in the last quarter.
Yeah.
So there is a sharp improvement in the price also.
Okay, and this we are witnessing for the month from February onward, not for January.
January onwards.
From the month of January or sir?
From the month of January itself, it has started improving.
So January it started improving, and now it is at this level.
Now it is at 1,10,000.
Yeah, expecting again to go up further and in the next quarter.
Right, sir. Okay, sir. And in the other expense line item, so what are the key constituents? I think the shipping charges are used to be one of the large components. So how are the shipping charges currently? I think the freight charges have come down significantly. So we will be reaping any more benefit in the coming quarters out of that, sir?
Deepak?
Yeah, actually last quarter you have seen that it has also come down compared to the previous quarter because POSCO shipments were not there, because that's a break bulk, and break bulk freights are always 2-3 times more than the container freight. So that is why it has come down. But now again we are starting with POSCO. It will go up, but generally the prices have stabilized and come down to a level of its previously 1 year before, whatever it was there, 1.5 years before, in similar level. So we are not expecting any increase in the freight component side basically. So there probably we'll gain little bit. Our realization will basically go up because of that lower freight also.
Yes, correct, sir. And sir, okay, sir, I join again the queue, sir. That would be better.
Thank you. Participants who want to ask a question may press star and 1 now. The next question is from the line of Shubham Agarwal from Equitas Investments. Please go ahead.
Yeah, thank you for the opportunity. Sir, I have just 2 questions. So firstly, on the volume side, have we completed all the maintenance part, and can we expect normalization in production this quarter?
Deepak?
Yeah, let me tell you. So considering the depressed market scenario, we have taken up all the things those were envisaged ahead. So accordingly, we have taken in the last quarter major thing, and this quarter also we are doing certain things, particularly at Thermally a little bit. So with that, actually, our plan is to basically this quarter volume will be more or less similar to the Q3. So which is little lower than our budgeted plan, slightly lower than that. So
okay.
That is what.
So 65,000 around we are expecting for Q4.
No. 65,000 is our sales. Our production target production for this quarter was 58,000.
Correct.
So we are expecting 59,000 production in this quarter.
Okay. So that's then less for Q4. Yeah. Okay. And secondly, on the cost side, so given what you have already told regarding the coke and coal prices, what is our expected reduction per ton for Q4 in cost?
As far as coal and coke is concerned, I think there should be some reduction, but difficult to give a number right now because it depends on the consumption. We'll come
but on an average per ton, how much can we expect it to go down?
Actually, he wanted to know about power plant coal or furnace coal.
Like coal and coke, both is asking. Coal, how much reduction we are expecting, Binoy?
In Q3, the average coal cost was 2,850, and we are expecting 2,700 in Q4.
Okay. But is it possible to give per ton our cost reduction expected for next quarter compared to Q3?
No, that would be difficult. No. It will be in the similar line mostly because coke prices, average coke prices still have not come down so far. So because the shipments, because the main Colombian coke, that price has not come down drastically. Of course, it has come down from the previous level, but not to the extent it will make difference for this quarter. So,
fair enough.
Like I told, in this particular quarter, last Q3 also, our coke cost in the production has gone up. Even though we have got a little lower thing because we have also certain coke at very high rate, so we are consuming that along with the lower cost, but the average cost has still not come down to a level will make some difference at this point.
So as far as coal is concerned, there will be some reduction, but coke very difficult to predict at the moment.
Right.
Maybe it will be at the same level or a little lower, but giving number would be very difficult. But coal definitely, yes, we will have a saving of around 100 rupees, 200 rupees saving in the 150 rupees saving.
Got it. Sir, and lastly, in the press release, it was mentioned that South Africa, there has been sharp increase in electricity prices. So can you give broadly what is the current scenario and how it is expected to impact us?
Deepak?
Yeah. Actually, South Africa, it has been already declared from the 1st of April, the ESCOM price, power tariff will be increased by 18.65%. And thereafter also is from May, June, it is their winter season where there is extra tariff. And the power situation is going in stage 6, stage 7. So which is, although so far it is affecting data and prepared load shedding. With all those things, we are expecting the ferrochrome. That is why I told in my previous reply, we are expecting still further increase in the first quarter of FY24. That's mainly because South Africans are always relevant for ferrochrome prices. And considering this price increase in the power tariff and all, so we are expecting higher prices in the market. Of course, everything depends on demand supply and how things are panning out, how China is working. Suppose there is again COVID or negative, things may change if they come to zero COVID policy and all. So we don't know. And also other major factor is Russia-Ukraine war. How it is panning out, it depends on that. Because of Russia-Ukraine war, the coke price from Colombia is not coming down, and the energy crisis in Europe is not coming down. So that is, and even at the moment it is winter is going on in Europe, for which their production, everything is subdued. So depends on many factors, but hopefully things will go right and it will improve in the first quarter than this current quarter.
Okay. Sir, and on the coke price, as you mentioned that the prices from Colombia is not going down. So is it possible for us to find coke from alternative sources? Because given my understanding is over the last 6 months, there has been correction in coke prices across the globe. Obviously, there was an increase recently, but given that our cost is not coming down from Colombia, I wanted to know whether we can procure from alternate source.
No, actually, considering our chromer, the chemical composition of chromer and all, we require 006, 007 phosphorus level or 010 max phosphorus level in the coke, because the phosphorus output in the ferroalloys comes 85% to 90% from the ore. So balance 10% need to be managed through only the scope you have is the reductant, which is coke. So for that consideration, that low cost coke is not available in China or Australia. They don't make coke, and domestic coke, though they say sometime, but they don't produce 010 phosphorus in India even. That's why we have a limited choice. And considering the Colombian coal going to Europe for power generation at this juncture, the prices are not coming down.
Got it. No, sir, fair enough. Thank you for answering all my questions. And that's okay.
Thank you, Subham.
Thank you. Participants may press *1 to ask a question. The next follow-up question is from the line of Joe Shaw from 7Cs. Please go ahead.
Deepak, regarding South African electricity scenario, I understand that 18.65% hike will be from 1st April 2023. Now, apart from this high electricity charges, there is availability of power is also an issue because of stage 5 and stage 6 power situation. So there are two issues. One is availability is also issue, and also power cost is also issue. So there are two whammies, right?
Yes.
Okay. Yeah.
Yes, absolutely.
Yeah. Okay. Good. Now, Prem, one more issue, that electricity duty matter with you. Now, Government of India is giving for other products is giving MEIS and ROSCTL scripts to refund duty paid on electricity, petrol, diesel, etc. So, are we getting this refund of electricity duty on exports of ferrochrome?
No, we are not getting refund of this. We are not eligible for that.
Okay.
Right.
Okay. And Deepak, one more question for you.
Yeah.
For February 23 tender price, Chinese tender price.
Yeah, it has gone up by 450 RMB.
As the participant have left the queue, we move on to the next participant. So give me a moment. We move on to the next participant, and the question is from the line of Arshaf Patel. Please go ahead.
Sir, given that we are dependent on Colombia for our coke requirement, sir, can we set up a coke oven to reduce the dependency from Colombia and produce our coke requirement in-house?
Deepak?
Yeah. So actually, you see the coke we use, which is 10 to 30 mm or 10 to 25 mm. So this is always a byproduct. So if you are making a coke oven and it needs to be viable, yours almost 75 to 80% needs to be of higher size which you need to sell. And for the requirement, for the type of requirement, the quantity requirement for us, whatever per annum, doesn't justify with that 20% and other things to be selling. That as such will be a different division and working out is very difficult. So we have thought about it in several times, but dropped the program plan for making cookeries, coke ovens and all several times, cost effectiveness.
Sure, sir. Got it. And sir, currently, as you have mentioned in past as well, that in long terms we don't have any debt, but what would be our debt in short term right now?
No, we don't have any long-term debt. We have repaid entire money last year. So we don't have any long-term debt as on debt on the books.
In short term?
Short-term working capital debt is there. That is around 300 and, just a moment, that is around 360 crore.
360 crores. So sir, as and when we get funds from Utkal Coal, do we plan to repay the short-term debt as well? Or then we want to conserve the resources for our...
Short-term debt is working capital loan, so that is going to be there.
Sure. Got it, sir.
That's all from our procuring raw material. So that is, that is, it is coterminous with the life of the company.
Got it, sir. Sure. Thank you, sir.
Right.
All the best.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 now. We have the next question from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yes, sir. Sir, when we look at the finance cost line item, there are two components to it. First is the interest on borrowing, and then is the foreign exchange gain and loss. So for the 9 months, we have a gain of 35.69 crore on foreign exchange, and interest cost is 23. So we are a net gain on the finance cost part. There is no this line item has contributed rather than being a deduction.
Just a moment, let me see. You're talking about 9 months period. You're talking about?
Yes, sir. For 9 months period, line item D, finance cost. When we look at the interest on borrowing, it is 23.06. And whereas the second line, it is a gain on foreign exchange to the tune of 35.69. So that means on a finance account as a totally finance cost, we have a credit of 13 crore rupees. So there is no outgo on account of the finance cost line item.
No, I am not seeing a credit here. The 36 crore is also outgo.
Okay, sir. Okay. So, sir, what explains? Oh, yes, it is in a bracket. I'm sorry, sir. My wrong.
Yeah.
So, sir, how does what is this? How does this line item get affected? And the reason is it only the short-term borrowing that we have in dollar denominated that has resulted in?
Yes. It is purely the working capital which we are taking in dollar terms because we have dollar earning also, so it gets knocked off. The gain on our turnover is getting reflected into turnover. That is not getting reflected separately here. Okay, that's why you are seeing outflow here, but you are not seeing the inflow. Inflow is clubbed into sales.
Correct, sir. You have the 9-month EBITDA number for us?
Yes, 9 months EBITDA number is there. 9 months our EBITDA, just a moment, it's 371 crore.
9 months EBITDA is 371 crore. And sir, the 9-month production and sales number?
9 months production is 1,83,000 and sales is 1,90,000.
Okay. And sir, we will be in the vicinity of 260, 265 for the year as a sale?
No. We'll be in the vicinity of 243, 244.
243, 244 should be the year target.
Yes.
And sir, as we have told that the margins will be, we will moving up the margin chain from 8 to 10 to 20%. Historically, sir, evening out these exaggeration, what should be the margin profile for us going ahead?
No, as I said, the EBITDA margins will be 15,000, 20,000 per ton on a long-term basis.
Okay. And so that's an absolute number, but just the margin expansion which you spoke from 8 to 20 on a consistent basis, this 20% is the number which we should factor in for a consistent basis, or this is also depending much more on the vagaries of the pricing?
No, we can expect around 20%.
20% as a consistent number.
Yeah, 20% we can expect on average.
Right, sir. And sir, going ahead also, sir, next year also, do we see any uptick in the volume part in the type of extraction of ore?
No. Next year also volume will be around the same level, 250,000. Because the capacity expansion will come into picture in FY26 only, not before that.
Okay, but I think some work we were doing, sir, to just improve the tonnage. I think so the chromo tonnage, because of some work that has gone into the underground mining. So when will that start coming into play? That
is coming in FY26.
Okay, and the greenfield will take much longer time.
No, FY26 our new furnaces are coming into production.
Okay.
And that year also we are expecting more tonnage from our mines also. So both we have planned in a manner that whenever we get extra ore, the furnace will also become operational by that time.
Okay, right.
Okay.
Okay, sir. Thank you for all the elaborate answers, sir. All the best, sir. Thank you.
Thank you. The next follow-up question is from the line of Joe Shaw from 7 Seas. Please go ahead.
Oh, Deepak. Now, yesterday this tender price for February 23, Chinese tender price announced 450 RMB. Actually, we were expecting about 900 to 1,000 RMB price hike. So, you think for this Q1 23-24, long-term contract price will be quite high because of power scenario and demand in China. So, it may go up to plus above $1.80. Any idea, or we cannot say now?
No. I cannot.
Very difficult to predict any price movement. Nobody can predict.
Because Chinese holidays, the spring holidays were also very, very much successful. There were some 300 million traveled. So it seems that China is getting back to normalcy. So it will follow that ferrochrome demand will also increase. And plus, when we compare it with the South African problems, and South African UG2 price of $270, price has to go up. The ferrochrome price, long-term ferrochrome contract price has to go up. Okay, let us wait and see. Now, Deepak, one more thing about today's budget. There is a very huge capital expense outlay of about 10 lakh crore rupees. Will it impact stainless steel demand and ferrochrome demand in India? What is your take on this capital outlet?
You see, this is stainless steel has to go up, and many things were pushed back because of the COVID and other things. Now things coming forward, and we want production and everything to go up, logistical support and other things. There will be demand is going to pick up, and it has already started picking up, for which ferrochrome prices in the domestic market also has gone beyond 110,000. So it will keep moving up. Right. We don't see any negative sentiment in this, particularly in India.
But particularly when the capex spending is so high, infra spending and capex spending in this budget, the demand should increase very much in the coming year. Stainless steel demand. What is your idea?
It should go up.
Right.
Why it should come down? Because with infrastructure development and all, naturally things need to move, and requirement of stainless steel will come.
Right. Okay. Thank you.
Yeah.
Thank you. Ladies and gentlemen, that was the last question for today. With that, we conclude today's conference call. On behalf of Indian Metal and Ferro Alloys Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you, sir. Thank you.
Thank you.